Good morning, you guys. It is the weekend, Memorial Day weekend, Sunday. Um, Hope you guys tomorrow end up going to visit some the grave sites of some of our fallen heroes. Anyway, yeah, that's what Memorial Day is about. Not thank a veteran. By the way, that's in November, not May. All right. Anyway, so I'm going to cover TSP Performance, the funds, particularly FCS and I funds. It's mainly focused, especially for those of you guys who are in my TSP Facebook groups, but it can be useful for those of you guys who are not as well and have any kind of interest in investing. Where's the momentum between domestic large cap stocks, domestic broader market, like smaller caps, if you will, or international stocks? We're going to cover that, okay? We'll have different time horizons. I posted a new graphic earlier this week, I think, where I covered some basics with momentum. I got some input on that. People wanted to get some more time horizons as far as that metric was concerned that I was working with. And I am going to be delivered on that today with this video, okay? And I will also show you what's going on with the FCS and I funds over the last basically over the last year and the last couple of months. This mainly focused on April and May timeframes, but also year-to-date performance as well. We'll get into all that in a second here. Let's start with the TSP fund prices and their comparative performances from day to day and over the course of the last each of the last two monthly periods and year-to-date. Okay, so right now, C fund still has the highest price at 120. That's what it ended with. S fund is currently at 111, and I fund is at 63. Now, mind you, if you're looking just strictly long term, looking at what's going to give you the best results over a long term with minimal movement at all, C and S funds are generally the ones that are going to get that for you. There are occasions when S fund actually has a higher price than C fund, but with more recent years, it's been more C fund than S. So that's why it looks like it. Now, all of these funds, their share prices reset to $10 a share at the end of 2002. So the first day of 2003 is when their share prices started to diverge again after all of the funds, all G, F, C, S, and I, they all reset to $10 a share at the end of 2002. All right, so since then, the fact that C fund has the highest share price out of all of them tells you that right now C fund has the best long-term price performance, okay? Now, you can go back at some other point in time here and find periods where S fund actually had the higher price and not C. But, and that's why I say it varies. It's just because C fund is higher now doesn't mean that it's going to necessarily be higher all the time. S fund will do you just as fine. If you're looking for any kind of a long-term good performance, any kind of a mix of large caps and small caps combined should do you just fine. All right? It doesn't matter how much you focus on one side or the other. You're probably going to be getting just, over time, similar results regardless, right? Now, I fund, it's barely over half the price of C fund. Let's tell you about what I fund's had a history of doing in the past. It's doing good right now. As we can see here by its year-to-date performance already being up at almost 14%. It actually was over 14% earlier this month. But it dropped back down to a little over 11 and has climbed back up to 13.98 to finish the week. For the daily performance, we see more green on the C fund side than anything else over the last. Here, let me pull up right there. Most of the dark green, which is the stronger, which is the leader out of those four funds. I don't look at G fund because G fund always moves upward at a very slow rate. So that's why you don't see G fund mentioned in here. Aside from that, though, on a day-to-day, most of the momentum seems to be on C fund. And the monthly performance, that also tells you right there that C fund is also where it's at. It's been the stronger green there. It looked like I fund was the outperformer earlier in the month, but then C fund took over around just before the middle of the month, around 11 or 12 May, and has since been the leader. Now, S fund's starting to catch up, though. So, and you see S fund, it's been a little bit stronger performance over the last few days, over the last week, I would say, perhaps, than what I fund has done. Even when all the funds were down on 19 May, S fund did not drop as much as I fund did. So, Usually what I like to look at for international stocks is the value of the US dollar. Okay, because we can have a global economy that's going up, but then iFund particularly, it doesn't just invest in stocks only. It also invests in foreign in currencies of those stocks too. So the exchange rate changes between U.S. dollar and the foreign currencies that are in the country, represent the countries that are part of the index that iFund follows. That's going to work against you when the value of the U.S. dollar is increasing, and work for you as far as the iFund is concerned if the value of the U.S. dollar is decreasing. That is why the iFund has done so well, is because U.S. dollar value has decreased over time. Let me go ahead and pull up a chart for you. I'm going to make this one easier because I don't have, didn't take the time to fire up my Thinkorswim platform, so I'll just go ahead and use Yahoo Finance here. All right, so U.S. dollar is at 99 right now. Okay, when the U.S. dollar value bottomed out a couple months ago, whatever, it got down to like 95, 96, somewhere around there. What's going on here? Okay. Oh, that's a 5 day. That's why. Okay, let me go out 6 months and show you what okay, down here in February or late January, it got down to as low as 95.55 intraday, and then it closed at 96. So in that neck of the woods is where it bottomed out. And that's where you were really getting a lot of strength from the iFund performance because it was getting helped by the US dollar falling. But now, then it climbed back up to March 30, and that's going to work against iFund. It'll at least slow it down. It doesn't mean iFund's going to go and decline with the US dollar doing that, but it's basically going to be watered down performance based on that. Okay, and then it went back into a decline from March 30 down to May 8. And then after May 8 came, when it closed at 97.84, now it's trending back upward. So May 8 is right there. And you can see once it started to trend back upward and got confirmation, its performance for the month, it started to soften. Actually, CFund had already started taking over the strength the day before that. So there's correlation there between US dollar value and iFund performance relative to the domestic stocks, CNS. Okay, so day to day, it looked like iFund was still outperforming S-Fund at first, but then looked like, it's still kind of back and forth a little bit here over the middle of the month, but there's still some strength there in the iFund, I would say, at least especially recently, in the most recent week. Looked like it led the way on Thursday, and it outperformed C, but not S on Wednesday. But it was the laggard on Tuesday, but it was the leader on Monday. So there's still reason to have at least some interest in iFund, perhaps, but at least as far as this is concerned. But I do have concerns about staying heavy myself in iFund because of the fact that US dollar, I don't really see it decreasing in value right now. I won't be covering S&P 500 this week like I usually do. I'm going to wait till next week because earnings reporting activity is it's slowed down since I last reported on the index. So I'm going to wait till the end of the month and we'll cover that. That'll be next week. And then we'll get more into that. Otherwise, as far as just TSP is concerned, iFund is definitely where the strength is at. Look like S and C are similar. There was a point in time here just recently, late last week, earlier this week, where C-Fund was actually outperforming S-Fund year to date, but it's gone back the other way where now S-Fund is outperforming C, just briefly. Okay, how long that's going to last, I don't know. I usually anticipate that if there is an expectation for a Fed fund rate hike, I would favor C-Fund over S-Fund. And as you guys know, I made a move from 100% S-Fund to 100% C-Fund not too long ago. So I'm anticipating possible more stronger performance from C-Fund over the coming months. All right, now moving on, I covered I showed you like a performance metric between C, S, and I, which one seems to have the momentum over any period of time. Now, on that post I did, I only covered, I think, the 5, 10, 15, and 20-day periods. I went ahead and took out that, and now I made it basically a 1 week, 2 week, 1 month, 3 month, 6 month, and 12 month window for you guys to compare. Now, on the 6 and 12 months, because the numbers move so slowly, I had to move those. I had to change those to 2 significant digits deep on the on as far as my scores are concerned here. When I had them originally the same, they were just persistently staying like everything at 2.0 or 2.1 or something. It was hard to discern which one really had the momentum over whatever particular period of time. So I went ahead and went an extra digit deep past the decimal on that one. Everything from 3 months and shorter, I went ahead and left as one digit deep. Okay, so for the 1 week period, right now the momentum as of the end of the week is generally favoring S fund most, and then a little bit, and then I next, and then C fund last. They're not far off from each other though. But as you saw earlier in the week, C fund is where C fund had the momentum. Same here. It's over 3. That means over the entire week it was averaging the being the leader of the 3 fund between the CS and I funds. Okay, so it's been a laggard more this week, but now over the 2 week period, still favors C fund, and it's basically equal on S and I fund performance. And then moving on to the 1 month. The 1 month trend is favoring C fund again. 2.3 is the average score for it versus 2.0 for I fund and 1.7 for S. And moving on to the 3 month. 3 month performance is supporting C fund first, and then I fund next, and then S fund. And then looking out to the 6 month period, actually favors I fund most. 2.04 versus C fund next, and then S fund taking up the caboose there. And then over the 12 month period, though, now this is actually more clearly favoring C fund there. So depending on your time horizon, you can get different results from your investments. From what kind of moves you're making, right? So, if you're looking 12 months out, how have you done? You've probably done better between being in C fund than anything else over the last 12-month period, is what this is suggesting. Those numbers I showed you earlier, those are just year to date, not 12-month rolling periods like what this is working with here. Okay. If you're looking 6 months out from today, previous to today, then obviously I fund is going to it will probably have done you better. But over a 3 month period or shorter, generally it's looking like C fund has been the better performer. So that is yet another telltale sign that maybe C fund is the better place to be, in my opinion. That's why I moved my money to C fund a couple weeks ago, whatever it was. I'm favoring large cap domestic stocks personally. When there's more expectation for the Fed, their FOMC, Federal Open Market Committee, for those of you guys who aren't really familiar with that, what the hell is FOMC? That's the Fed, basically. When they congregate and meet up to discuss rate policy, they're called the Federal Open Market Committee. That's when they meet and talk about what do we set the Fed funds rate at? Do we want to leave it the same? Do we want to increase it? Do we want to decrease it based on these different data points that they discuss at these meetings? All right, so right now, 10-year bond yield is suggesting that there is a rate increase coming up sometime in the future. The short-term bonds are not really suggesting anything at the moment from what I've seen. I won't go into this. I'm not going to pull up the detail on that right now, but I can. Actually, you know what? I can. I'll go to the basic table here first. The 10-year yield gets talked about by Ricardo Tubbs and some others here. I think it's a good one to look at. I know Ricardo talks about it, and I know in the past I have actually seen Warren Buffett. He's actually been asked in the past, years past, about if there's only one indicator he could look at at all and nothing else to make his investment decisions, what would he look at? And his answer was actually the 10-year Treasury yield. So this is a good reason why Ricardo looks at this yield as well. What information can you glean from the behavior of the 10-year Treasury yield? That's basically what what it's about there. It's right now you can see it's trending upward from the beginning of April. It was at 4.33, and it's starting to climb. It's gotten up above 4.5. Actually, even got up to 4.6 briefly last week. Go check out Ricardo's posts, and I think there was someone else who also in the Swing Traders group. I know a lot of you guys watching this are not in that group, but we have a couple members in the Swing Traders group who post some good analytical information as well. So I encourage you, if you want to learn more about how to make good decisions of your own and not just be spoon-fed info, because there's going to come a point in time where you're not going to have someone to hold your hand with your investment decisions anymore. What are you going to do? It's better for you to at least have some kind of an idea of what information you can work with to make better, more sound decisions of your own. Okay. So these guys, as well as myself, are, we're giving you guys information that could be helpful and useful to you. Okay. So now Ricardo explained in one of his posts, or I think more than one post, a conversation about how, when he sees a 10-year yield climbing like this, it's usually a sign that there's a Fed funds rate increase coming some point in the future. Not necessarily right away, but usually within the next year, there's going to be a rate hike. And then when inflate, because the longer term bond yields are linked a lot more heavily to inflation, and the short term bond yields over here tend to be linked more to Fed funds rate activity. So I've talked before about the 1 month yield. That's the one I like to look at to see what's given you the short term perspective of what is the bond market suggesting that the Fed is actually going to, or FOMC, what decision are they likely to make on their next meeting? They're generally biasing a little bit toward the downside, as you see there, but they're staying not far away from the current 3.75. That is the top end of the current Fed funds rate target. Okay, it's biased a little bit toward the downside, but not by much. It's just maybe some profit taking and buying back up, that kind of stuff perhaps going on. But yeah, going back to these long terms, not just the 10, but even the 20 and 30 years, as you see there, they were at the 20 and 30 both were at 4.91% at the beginning of April, and they've actually climbed up above 5 now. So these are both all these long-term yields are indicative of increasing inflation. There's strength there, so that gives more reason to believe that the Fed is going to want to be a little more hawkish with their Fed rate policy in the coming months. Overcoming meetings, whatever, than dovish. For those of you guys who don't know, hawkish means they are more aggressive about increasing rates, and then dovish would be more. I don't want to say aggressive, but they're more strongly in favor of decreasing rates the more dovish they get. Okay, that's some good terminology for you guys who don't know what I mean by that. All right. Since I'm here anyway, I'm gonna go ahead and cover the bond yield curve. You guys know I've talked in recent videos about looking, see how bullish the bond yield curve looks, or not bullish, or whatever, or how many inversions we have going on here. Now, an inversion of any kind would be like this right here, between the 1 month and the 1.5 month. They go down. You want to have a step ladder, kind of going up that way, going higher as you go progressively to the right. That would be a bullish bond yield curve. Right now, you have just a little bit of inversion going on here between the 1 month and the 3 month. But then after you get past the 3 month, there's no inverting at all. Even the 4 month is higher than the 1 month. And it goes up, 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 and up. Now, 20 and 30 year, they've been a little bit back and forth. There's been, I'm curious myself what's actually behind the 20-year yield being right up there by the 30. Instead of a little bit, in between the 10 and 20 like it would normally be. But it still indicates there's some sort of inflation going on there, or some strength. All right, I don't want to make this too long. I'm going to go ahead and wrap this one up for you guys. Hope you guys got something useful out of this, at least some insight. Even if you're not going to make any changes to your accounts, at least some insight, some gain knowledge that you can work with at some point in the future. All right. Thanks for taking the time to watch. If you guys saw any or all of this, appreciate you guys watching. All right, you guys have a great weekend. Enjoy your Memorial Day holiday, and we'll see you next week.